Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. Today we have John Warren of Chicago, Illinois. We are very pleased to have him on today's show. John is an active real estate agent specializing in 2 to 4 unit space in and near western suburbs of Chicago. John excels both at helping new clients, investor clients build their portfolios using creative strategies and assisting clients which are listing their properties to maximize their investments and through innovative marketing strategies. In addition to his work as an agent, John is actively buying value-add apartment buildings. He currently owns and operates a portfolio of 52 apartment units and finishing up construction phases of a 19-unit gut renovation project in Illinois. How you doing, John? Thanks for joining the show.
Thank you so much for having me. This is exciting.
Absolutely. Yeah, so we talked briefly before, and I was just really excited to kind of talk with somebody in a different market, kind of doing similar things. We have a brokerage division as well, but you're kind of taking at a different angle. So I just want to kind of learn a little bit about your background. I think it'll bring some value to our audience.
Yeah, for sure. So obviously you gave me a nice introduction there on the investing side. So I buy apartment buildings, and I just purchased this 19-unit project with another partner, and we're gut renovating it. So it's a lot of fun, plumbing all over the place, electrical, ripping walls open, doing all that kind of fun stuff. And once we renovate them, we, bring them up to a new standard of living, rent them out, and, going to increase the value quite a bit, which is the goal. And then, yeah, go ahead.
So how did you kind of get started in your real estate career? Like how many years ago? And then kind of what do you specialize in?
Yeah, for sure. So I started about 4 years ago. My wife and I bought a 4-unit property, which is the smallest one that we own currently. And from there, we started partnering up with people and buying larger buildings. So we bought a 9-unit, a 20-unit, now this 19-unit.
And where are they located? Like what part of Chicago?
Yeah, most of them are in the Chicago western suburbs. So we actually invest in the same area where I work as an agent.
Oh, it's kind of good to kind of, you understand that whole marketplace there.
Totally.
So I interviewed someone last week that works on the south side. Is that near or about your marketplace?
It's funny because when you look at Chicago, the south side is one of the markets that a lot of people are attracted to right now because of the high cap rates you can get. Mm-hmm. It's a very different market than where I'm at. The cap rates are a little bit lower in general. Where I'm at, more like around maybe a 7 or an 8 cap. Some areas are 4 or 5 in the A class areas. So we're investing in an area where the cap rates are a little lower, but in general, the tenant class is a little bit better and it's a little bit nicer areas. And that's very broad brush strokes, obviously, because when we say south side or west side in Chicago, I mean, this is a huge market. So.
Yeah, it's a very huge market. I could say very dynamic. I have a couple investors that I know out there, and it's kind of hard to understand unless you're actually there being an investor or being a broker and you kind of have your boots to the ground.
Sure.
Is there any other type of characteristics that you like about that specific market compared to others? And would you look outside of that marketplace?
Yeah, I mean, what I like about it is it's extremely dense. So the towns that I'm investing in are extremely dense. Berwyn is one of the towns I've bought buildings in. It's the densest area in Chicago outside of the Loop pretty much. So there's just a lot of people, and that translates into a lot of good options for renters. You can screen out a lot of bad ones and kind of get your pick. And really, it makes it a little bit easier to run a property when you have good quality renters. There's a lot high demand, so it's an excellent rental pool. Also, we're pretty close to Chicago, so where I live and work, most of the towns are 20 to 30 minutes from the Loop. So if you're in Chicago, the Loop is the CTA trains. In Chicago, that's everybody talks about the Loop in Chicago. That's the main downtown hub where everything is. Mm-hmm. And we're about 20 to 30 minutes from there, depending on which town you're in. But there's great train access. We use the elevated train as well. There's a lot of stops in these areas, so it's a good area for tenants. So there's a lot of demand.
As far as as far as demand, you have the population density. As far as where do you see it economic wise, as far as is it, a growing market, stable? Like, what are you kind of
Sure.
experiencing?
Right now, the areas that I'm working in, they've been improving rapidly. A lot of influx of capital, a lot of developments. I know that that's not true of every single area in Chicago, and that's the thing. I mean, I think a lot of people think of Chicago as a small town, like a lot of Midwestern towns, but it's obviously quite a bit more dynamic than most of the towns in the Midwest. So I consider my area a submarket, the near western suburbs. So there's a lot of money being put into development, a lot of good things going on, and nobody's building affordable housing. So if you're in the space, of the C class or B class apartments, workforce housing, if you would, it's a great space to be in because there's not any new product coming online.
Mm. Yeah, that's a very point. Yeah, it's kind of a little bit. I'm here in Connecticut's a little bit slightly different marketplace here, and I can see you got to be very, very, I say, strategic, and as far as kind of like what you're looking for, as far as assets and stuff like that. Kind of switching gears to working with investor clients and stuff like that. Are you working with a lot of outside investors that's kind of bringing in capital, or is more localized investors that you're working with?
So for the most part, on my own personal investing so far, I've just worked with partners, and they've all been local people. Um, we've toyed with the idea of bringing investors in, and perhaps in the future we would.
Mm-hmm.
As a broker, obviously, I'm working with people from all over the place, local,
Mm-hmm.
um, not local. I have a lot of out-of-state investors as well who are attracted to Chicago because they can get the nice cash flow. It's kind of a good balance of appreciation and cash flow.
Mm-hmm.
And obviously, it's a dynamic market, so you have a lot of great contractors, property managers, agents, attorneys you can work with, being in a primary MSA.
Yeah, absolutely. I see that a lot. A lot of capital being put into the Midwest markets, like especially from like higher tax. I know, Illinois is kind of up there as well, but
Yeah, we're getting up there.
more so on the west, the coastlines, Connecticut, New Jersey, New
Right.
York, California is kind of looking to take advantage of that. What's kind of like your process of, like, say, a new investor comes into your marketplace to kind of help them navigate through the waters, to kind of find good investments, or kind of advice
Sure.
that you give them?
So I work with a lot of new investors on the agent side, right? That's what I do as my day-to-day business. And I always talk first and foremost about how are you going to manage the property, because I think the property management is really how you make or break your investment. I mean, no property is a spreadsheet. There's real people that are paying you or not. It doesn't matter if you're in residential, commercial, office, industrial. Somebody has to pay rent. You have to look at that and say, how likely are they going to be to perform? And that's what really makes or breaks your investment. So especially with my out-of-state investors, that's the very first conversation I try to have is how are you going to manage the process, the
Mm-hmm.
property. Once we get past that, I like to talk about the different types of areas, A, B, C, D class. I personally steer away from D class. I just don't think that there's much reason for me to be there as an investor or an agent. There's
Mm-hmm.
plenty of good opportunities in the B and C areas if you're patient. And so I tend to steer my clients more towards those areas where you can get really good quality renters, strong rents, it's less risk.
Yeah, it's kind of good that you being an investor having actually interest, in it, so you kind of can give them that kind of prime advice. Are these outside investors kind of looking for more turnkey, or are they looking for some, I know, maybe a mix of value add? Like, what are the kind of stuff you're seeing out there?
Yeah, I think everybody wants value add, right? That's
Of course, yeah.
everybody wants value add, the least amount they can get away with. Of course, we're all smart like that. We all want really great investments that are not too much work. Um, Turnkey is tough in Chicago, I think, right now. It's at least in the markets I'm in. Again, I can't speak to the whole market, but in the western suburbs, it's hard to find things that are turnkey that give you the returns most investors want. Because obviously, I think most investors use the stock market as kind of a benchmark. So if they can do better in the stock market than in a rental property, they're going to go that direction. But I think what I'm seeing a lot of is like light value adds, where you can do some painting and flooring and kind of just basic turnovers and reposition properties that have been owned by non-investors,
Mm-hmm.
2 to 4 unit space, but even sometimes in the, by a 6 unit or an 8 unit, you can find kind of a mom and pop investor who doesn't really think the same way as the professional investor class. You can really get nice values.
Mm-hmm. As far as the you kind of assisting these types of investors, are you kind of doing the whole thing from helping them get finance referrals, and
For
of
sure.
course set up the property management? I mean, so you're pretty much doing the whole gambit to kind of help them, navigate that process.
Absolutely, yes. I mean, on my brokerage, there's only 4 of us at my brokerage currently, Second City Real Estate, and part of what I liked when I joined this brokerage was I came from a more traditional brokerage that did residential real estate, single-family homes and condos and things. The thing I like about this brokerage is that's the main focus. So all of us are investors. So because we're investors, that means we have good attorneys, we have good lender contacts, we have contractors. So my goal is not to let go of clients, at closing. I mean, yes, that's when you get paid, but that's not really the end of the relationship for me. I want to see them turn these properties into a success. And so I try to be with them every step of the way as much as I can and be there for somebody they can lean on a little bit along the way. Say a mentor relationship even, if needed.
Yeah. So as far as tell us about the new project. Is it new construction or
No,
it's a major rehab?
Yeah, it's a major rehab. The building was built in 1931, so it's this beautiful Chicago style brick building, 3 stories. If you've been in Chicago at all, you've seen these types of buildings. They're always on the corner lot, and it was just a really rundown apartment building, very distressed. The previous owners had 5 vacant units when we looked at it, and by the time we closed on it, there were 8 vacant units out of 19. So it was definitely not fully stabilized. We went in and essentially vacated most of the building so that we could get into the plumbing, the electric, the stuff that is, long-term deferred CapEx. We got in and started doing that, turning the units around, and we've been bumping the rents pretty significantly. I mean, the previous owner was getting anywhere from $550 to $625 for a 1-bedroom, and we're getting right around the $900 to $925 mark right now.
Wow.
So pretty nice turnaround on the rents.
And how's the kind of timeline on that type of project?
Sure. We bought it in September, and we have about 3 units left to renovate now as of April. So we're looking at being done with renovations probably by the end of this month. And then obviously the lease ups will probably trail a few weeks to a month behind that.
So as your goal is kind of to, add value, then kind of sell it off for a premium, or just kind of like a buy and long-term hold strategy?
We're probably gonna refinance it. It's a really nice asset, and it'll cash flow really well. And the guy that I partner with, we're gonna explore non-recourse debt and see if because we bought it with recourse debt. So look and see if we can do non-recourse. The cash flow should be really good. And obviously, if we can get a bunch of our capital back, we can get back in the game and do it again.
Oh yeah, of course. Just keep as much as you can do it until the markets change, or the financing interest rate change, to see if it's kind of makes sense. So you got to take advantage of it while it's still there. One thing that I was curious about, because I know the Chicago is such a dynamic market. I've been just learning more about it. Is there a lot of regulatory things as far as rehabbing and stuff? I knew stuff were regarding the porches and different things that they have to be a certain way. I know here in Connecticut is very regulated on certain things. Is that the same there for Chicago?
It most definitely is. And that's actually one of the tricky things when you're looking at a value add. And I'll be the first to say that I didn't do everything right, even on this project. The porches were one of the things that all my research said could be repaired. And after months of owning it, we're realizing we're probably going to have to do a replacement. So that's not exciting. But yeah, absolutely. The construction, it's highly regulated. Some people look at that as a huge negative. I kind of look at it as a positive in a lot of ways, because I think a lot of it helps keep the property values high over time, and it helps keep the neighborhoods up. So a lot of areas in the Midwest are kind of falling apart because they're not as highly regulated. So the building stock is just left to rot. So obviously it's a double-edged sword. You never want to be the investor that's stuck doing the big job that you didn't expect.
Yeah.
But it is better for the neighborhood to have high-quality properties that are kept up to code and things. So I guess it was a long way of saying yes. It is pretty regulated.
Yeah, I mean it's kind of key, because it comes into the underwriting process. So you kind of gotta you really gotta know the landscape of the land to make sure you underwrite it properly, to account for things that pop up that way. And some people that's coming from outside in and say, "Oh, this is a cheap building. I just fix it up," and then by the time they get the inspection, they find out there's a whole bunch of different stuff they have to do and keep it up, and it kind of will kill the cash flow. So it's very important to kind of really understand the regulations and the laws there.
Absolutely, yeah. And I think that's part of the thing with value add is, I think for me, I've done 3 value add apartment buildings now, and I've never really taken any cash flow out of them for the first year, because they've always been messy enough where it's better to just keep funneling the the cash flow and the rents back into the project until it's in a really good stable place, and then you can kind of build your reserves up and and then you get to enjoy it for a long time because you've really
Hmm.
taken care of most of the deferred maintenance.
Yeah, and like you had mentioned too, that it keeps the value there because the everyone's in the neighborhood is following suit, and you have good pristine buildings. So when it's time for potentially that full exit strategy, and someone wants to buy,
Right.
they know they're going to get a really good product at the end of the day.
Exactly. And I think it makes it easier to sell when the
Oh
time
yeah,
comes, right? So
yeah,
that's the
absolutely.
thing. I mean, these buildings are, it's funny because I've talked to a lot of experienced investors, and once you get out of the 2 and 4 unit space, they're actually harder to sell in like say 8, 10, 12, 15, 20 units because it's a different investor and has
Hmm.
deeper pockets. So I think it's good to have a really well-run building with really clean books, where you can show the financials, and then you can
Hmm.
really get the sales price you're wanting.
Yeah, absolutely. As far as like the just kind of going a little bit deeper now, as far as like tenants, is it more, you would say, is it more landlord or tenant friendly state?
I mean, Chicago definitely as a city is extremely tenant friendly. The suburbs are not under the Chicago landlord tenant ordinance.
Hmm.
So I'd say it's slightly less aggressive, but it still very much favors the tenant. So really all that means to me is that screening is even more important, right? So making sure that only the quality tenants are getting into your building. So we
Hmm.
have had to deal with a few evictions. So far, knock on wood, I've only had to evict 2 tenants in Illinois. Both have been inherited tenants. So that's part of the business, but and the process takes a while, 3 to 4 months typically.
Yeah, yeah, I would expect. Yeah, same here for Connecticut. I sometimes use the term like professional tenants that
Right.
kind of like know the law, more than the actual owner itself, and that's kind of key if you're going to get into this business. That you gotta understand it, because if you have from a point where they're not paying rent till you get them out, you have several months, and then you have things that could actually delay that even more, and then it's killing
For
your
sure.
cash flow.
For
And if
sure.
you have stakeholders, other investors that's involved, or you just really can't afford that, it really would destroy the whole building and kind of put you into problems. I had issues when we did a property management years ago where it would put the landlords right out of business because they didn't account for getting a problem tenant out of the building, and it killed their cash flow and end up foreclosing on them. So that's
That's terrible.
very key. So depending on your state, your local ordinance, you got to make sure that all of the tenant landlord law, you got to make sure with the timing and getting everything done, and hopefully never get to that point. But that's the business. It's
That is
something.
part of the business, right? And I think a lot of it can be diverted by good soft skills. So
Mhm.
like when we turned over this building, we had to ask 12 tenants to leave. Of all the people that left, only one was evicted. So
Mhm.
everybody else left pretty quickly, quietly, no real issues, and
Mhm.
really didn't even have to do cash for keys except for I believe one person, and
Mhm.
even that was only half the security deposit, so it wasn't bad. But
Mhm.
you do have the occasional professional tenant, and the reality is that's what there are attorneys that specialize in this stuff in the area. If you own the property in a corporation in this area, you actually have to use an attorney anyway.
Mhm.
So you're just going to have to make sure you get a good attorney that knows the system and just do exactly what they tell you to do. You know,
Mhm.
follow the timelines they give you.
Absolutely. So you specialize in that particular market. Is for your group, your brokerage group, are you guys looking at expanding as far as like
Oh,
looking
sure. We
into that?
cover the whole Chicago market.
Oh,
So
okay, okay.
yeah, so one of the things I really love about our brokerage is that we each specialize in our own area, and then we
Mm,
refer business back and forth. So we've actually worked with the same clients that are looking in multiple areas with people in the brokerage, and it's a very good relationship between all of us. So yeah, we cover most of the Chicago area right now.
mm. Do you kind of have any knowledge on the other marketplaces that you can give some insights to our listeners, or?
Sure, sure. I think if you're looking at the Chicago market, like I said, a lot of people are looking at the South Side, and there's several neighborhoods that are really hot right now. I know South Shore has been a really big neighborhood where a lot of people are investing. Bronzeville, Washington Park. There's a few neighborhoods down there that have really been, um, there's a lot of potential because the Obama Library, there's been talk about it going in there. So there's this, potential for this massive investment. Same thing happened when the Olympics were going to come to Chicago. There was a lot of talk about the Olympics in that same area. So if and when something is put there, those areas could just absolutely explode because they have beautiful building stock. I mean, the buildings are really stunning. They're close to the lake. They're great. They're close to the loop. So the South Side is one of those areas where you really want to make sure that you're working with somebody who is a specialist because, it truly is block by block. Like one block over could be terrible and your block could be
Mm-hmm.
fine. And you really have to know that. So even me being from the area, being in the business, if I went down to that area, I'd be working with one of the guys from our brokerage, Ronan, who knows those areas. I wouldn't try to buy something on my own because you just really have to know every neighborhood intimately. Um, also in Chicago, the near west side of the city is starting to see some signs of revitalization. Again, there's a bit of urban pioneering going on, so you have to be able to go in some of the dicier neighborhoods, but you might snap up a value that'll, you can see some incredible appreciation in Chicago. Kind of like if anybody's familiar with West Loop. West Loop, 6-7 years ago was nothing. Now it's this incredible area where there's cranes on every single block building new buildings. It's unbelievable. Most people that live in Chicago that I know are interested in living in the north side of the city, which is where some of the more desirable neighborhoods are. Those areas you see very low cap rates, very little returns, but they're just more expensive, nicer, more desirable properties.
Mm-hmm.
And then as you get into the suburbs in Chicago, the far south suburbs tend to be some of the hardest hit population-wise because those far south suburbs are so close to Indiana that people are able to just zip right across the border and get everything's cheaper.
Yeah, that makes sense.
The western suburbs where I'm at have some really attractive opportunities, a lot of multifamily properties. Also the northwest suburbs, which are up towards O'Hare Airport, have some interesting building stock and things like that. And then if you go too far north, you just get into the North Shore area, which is all just really nice single family homes. There's not as much multifamily there. So
Yeah, it's very interesting. Yeah, it's so big and dynamic, and to your point of each place is going to possibly block by block.
for sure.
And you really got to know, but then there's also pockets that could be some very not at desirable at this point, but then with the new development or revitalization, it can really be a really big good buy heading into the future. Is
people
that
that know those areas, right?
Yeah. Is that say part of the Obama library? So that is part of the South Side?
Yes, it's going to go into some of the. Well, there's been talk about it, right? And so, because I'm not investing in those neighborhoods, I'll be honest, I don't have my thumb on the pulse of that conversation. But the talk is that it's going to go into one of the neighborhoods down there on the South Side. So that's obviously whichever neighborhood gets that, there's going to be a huge amount of economic stimulus to those areas, just from the tourism and the construction and everything. It'd be fantastic for whatever neighborhood it ends up in.
And then your marketplace is any part of that historical, or is this
There are definitely towns that are historical in the area. Yeah, I mean, so Oak Park is close to me. That's one of the most historical areas in Chicago. Beautiful suburb that's right next to the city. So yeah, you deal with some areas that are historical. The buildings that I'm dealing with are not designated historical. They're just more of your kind of standard apartment buildings where you can renovate however you need to renovate.
And I could imagine, as parts of, we used to invest in Western Massachusetts, and there's some historical areas there. We had to have some hurdles of making sure stuff was done in a certain particular way to meet the historical society. So is that, I'm assuming, the same thing in those historical parts of West Side?
Sure, there are definitely towns, like the town where I live, Riverside, the whole town is a historical landmark, and there are a lot of buildings that are they're historical landmarks. And so if you go to renovate, maybe the wood windows, you have to, you can't replace them. You have to refurbish them, or there's things like that that come into play for sure. I think for investors looking in this area, though, there are plenty of kind of your B and C class suburbs or markets where you don't really have to deal with a lot of that. I think there's plenty of areas. Those are more like your A class areas, in my experience, where you have to jump those hurdles.
Yes, I understand. You kind of you're doing the brokerage and investing. Just on a brokerage question, what are some tips for new brokers getting into business? I know you gave us a lot of tips. But is there anything else you can offer people who have that background?
So when I got into the business, I was reading a lot of different books. I don't know, can I plug a book on here? That was one of my next questions. The book by a guy on Bigger Pockets, Mark Ferguson, How to Make It Big as a Real Estate Agent, I believe it's called. It was the best $12 I think I spent. Just basic stuff that you need to know as a broker. It's all relationship business, as you know. So I think one of his things was to call 50 people a week when you're starting out. And at first you're thinking, man, how am I going to call 50 people a week? But it forces you to get out there, talk to people. He talks about doing events. So I started a meetup, and the meetup has been wildly successful, and it's been a great not only great information for everybody that comes, but for me, obviously, it's a great networking opportunity. So I got that from the book. I mean, it was a really great book. I kind of followed his basic formula, and that kind of got me started, honestly.
Wow. Also, tell me about the meetup. So is it weekly or monthly type of
It's
thing?
monthly. Yeah, so
Cool.
it's just a networking meetup. I post it on BiggerPockets, meetup.com. Have like an email list that I send out, to people who have expressed interest in coming to it. And it's just a really cool chance for everybody to get together, network. Every month we have one person in the real estate space come in and just talk about what they do and their experience. Many of them are investors, but not always. So we've had everything from lenders, attorneys, wholesalers, flippers, property inspectors, property managers. We just try to
Wow.
bring in somebody that has a specialty. And so every month it's a little bit of a different flavor. But it's a really cool chance to meet other people who are like-minded in the same area of the city.
Yeah, absolutely. And possibly you'll work with each other in certain capacities. I mean, I've been going to meetups for years, from, local real estate ones to just general business networking, and just
For sure.
kind of just exploded the business because now you're dealing with a whole bunch of like-minded folks, share information, and even just like a little tip that, like from a book that they recommend, and you read it
Right.
and end up, helping change your business. So it's like, I'm totally for that. So that's pretty cool.
It's
So,
free. That's the best part about it.
yeah.
All we ask is that people buy some food at the restaurant that lets us go there for free. It's just a great way to meet other people.
Besides from working, are you a family man, kid,
Absolutely.
wife?
Yeah. Yeah. My wife and I have 3 boys, so they keep us very,
Cool.
very busy. 6, 3, and 6 months.
Oh, wow. Wow.
So yeah, we're right in the middle of it. So we
So you got
actually
a little bit
had
of everything there.
Yeah, we had my third son, James. He was born the same week we took over the 19-unit building. So I
Mm.
actually broke my ankle playing basketball that week. So it was a pretty crazy week. I
Oh,
was
wow.
walking around in a boot with a bag of keys, opening up vacant units while my wife had the baby at home.
While
So
pushing a stroller and stuff
yeah,
like
it's pretty
that.
wild, man. Yeah,
Well,
but
you
yeah.
definitely got the experience now,
Oh
so.
yeah, yeah, for sure. I've done a lot of fun stuff. I have a lot of good stories as a landlord.
Oh, very cool. So, besides that, can you tell us kind of, I mean, obviously you're very successful, and you're just doing a whole bunch of different things, and that's just very impressive. One thing I always ask people is kind of like what their morning routine is, because I always like try to hear what other successful people, and I think it'll give a lot of value to our listeners as well.
For sure. Yeah. So my morning routine, full disclosure for everybody that's into morning routines, I am super into them. And I had a really tough time the last 3 months with the newborn. That really threw off the morning routine. But uh, my typical morning starts at 4:45 a.m. I just start with hydration, get a cup of water right away, and then mess it up with a cup of coffee right afterwards. Some dehydration. But typically, I try not to do any email or work for the first 10 to 15 minutes. I stretch first thing in the morning, kind of get my body going a little bit. Then I'll jump on, do a few things on the computer, and then after that I try to get a workout in before the family gets up. So then 3 mornings a week I don't do the regular morning routine. I do the hydration and the coffee, and then I play basketball 3 mornings a week.
Very
So
cool.
get some exercise in there too.
And are you kind of like, when work is done, are you like turn off the phone, or are you kind of like a little bit open space when it comes to
My
working?
wife probably wishes that I did. I'm trying to implement some business hours right now, but I'm sure like many entrepreneurs, I have trouble turning it off.
Yeah,
So
that's the thing. Yeah, it's hard to turn it off, and it's really a struggle. I totally understand that.
yeah, especially when you love what you do. It's like it's not like
It
this
doesn't
is
feel
a
like work. Yeah.
chore. Yeah, I mean, you're talking to people who are buying deals. The deals are interesting. There's lots of things about them. They're really cool. You're negotiating the deals. So that's tough to turn that off. But I do my best to carve out different times in the week where I can just focus on the family. And that's one of the things we've been working on this year, my wife and I, is like setting aside different times. We say, all right, we have to turn off the phone, have to turn off the real estate for a little bit, and do what's really important. So it's a
Yeah,
work in
absolutely.
progress, though. Balance is
Yeah,
not my strongest suit as of yet. I'm working on it.
it's a lifelong struggle. Is a lifelong thing that you're always working on. As long as I think, as long as you're conscious about it, you understand it, and you have a supportive family that will work with you to kind of get it better. And of course, it's always trying to find that balance. It's
For sure.
but like you said, it was just, it's not, it doesn't feel like work. It's it's like, it's fun. It's interesting. It's kind
It's
of
very
keeps you
interesting.
going. So
Yeah, absolutely. I mean, there's nothing more interesting than to me than getting a new building that's beat up and tired, and you go in, you fix it up, and pretty soon you have a really beautiful property that's desirable. I love that. I love that turnaround process. It's a lot of fun.
Yeah, absolutely. Yeah. So, I mean, you gave us so much insight and tips. How do we get in contact with you and,
For sure. Yeah.
continue to follow up with you?
I'm easy to get a hold of. I guess I can just give my cell phone. It's 847 area code 894-2433.
Mm.
They can also always email me. First initial J, last name Warren, broker, jwarrenbroker@gmail.com. My website's jwarrenbroker.com.
All right, perfect. Yeah, I really appreciate that.
Fine.
And it gives a lot of insight. It's good talking to another fellow broker and investor, boots on the ground from Chicago.
Sure.
And yeah, I want to definitely continue the conversation in the future because, like I said, Chicago is such a dynamic market that you really need someone that's there, that's doing it, that understands it, and kind of knows a leg of lamb, and be able to kind of navigate to find those good possible investments and investments in the future.
For sure. Yeah, I really appreciate the opportunity to be on with you. This was
No
fun.
problem. All right, thank you again. We'll talk to you soon. I appreciate
Talk to
your
you
time.
soon.
All right, take care.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.